Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today, being the beginning of a new month, I thought it was time to sort of have a glance over what had happened in November. And actually quite a lot has happened in November, I think you'll agree. And there's a lot of media furor around the rally to new record highs in US indices. So I picked one of those. I've picked the Russell 2000. And I've got a monthly chart for you to look at. So this goes back all the way to 2009, with each candle being a month's worth. And I think you'll agree that November's move, which is that big white candle on the right, is on a par with what we have seen in the beginning of this year and a couple of other times in 2018. So it is a very big move and much, much bigger than what we had seen. And it's crashing around either side of this very neat trend channel that I've drawn in for you since 2009's low. What we then can say is that all price action since 2018 has been an A, B, C, very large correction with a spectacular rally in the second half of this year. We've got another month to go. Surprisingly, this index is not overbought, and volatility, historical volatility, believe it or not, is relatively low. So be careful if you think of buying VIX options, because these are so expensive most of the time, year after year after year, but you're really paying through the nose for insurance on a downside move. I think what's going to happen over the next 3 months is we're going to revert to far smaller ranges. We are just above the top of the channel, so have a look. Last time we were above the top of the channel, and you can see how the ranges suddenly just get very, very little. And then without any warning, they sort of turn down into the A wave lower. Something like that, something along those lines to get you back inside that trend channel. That's my idea on the Russell. The other one that perhaps you hasn't caught your eye this month, but it has moved quite a bit, is the US dollar index. Here I've got a weekly chart. And you can see from rallying dramatically in the first quarter, well, collapsing and then rallying dramatically in the first quarter of this year, it has now been on a far steadier trend, moving lower. I think the whole thing is potentially an inverted pennant type pattern, with the high on the chart being the bottom of the flagpole, shall we say, and that triangle recently, consolidation that we've seen recently, being the pennant part, the flaggy bit of the formation. Now, what's happened is that you see October and November were consolidation months, so it doesn't look like anything very, very exciting. But this week's move is down to lows that we haven't seen since the first half of 2018. So multi-year lows, I think you'll agree. And I think we've got more on the way down. But more importantly, the fall from the high on this chart at 103 to September's low at 91.75 is 11% loss in the purchasing power of the US dollar. So if your index is to maintain its value, it too will have had to rally by that much. So I think this one is going to drop to 86.5 and then 82, meaning that to keep pace, your indices should rally. My third and final chart is a slightly more boring one, I have to admit, but it's gold. It's a weekly chart again, and you can see that what's happened this year is not terribly interesting, or rather in the second half of this year, it's not terribly interesting. It's just been a slow drift. And now we're sitting on the 200-day moving average, the bottom of a Bollinger Band. The 50-day moving average is tipped lower, and the parabolic stop and reverse is bearish. I think there's more drifting to go here too. That's all for this week. Take care. See you next week.